heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Micron falls as the forecast fails to meet the loftiest AI-driven expectations. Full coverage ahead.
Plus, SpaceX notches a $210 billion valuation in its latest tender offer. Details ahead.
And we go live to Santa Ana, California. That's as police raid a warehouse of suspected stolen merchandise bound for marketplaces like Amazon. All that and so much more ahead. But first, we check in on these markets. And look, a little reprieve to some of the selling that we'd seen earlier in the trade is, well, the bad news is good news on the macro front. Some of that jobless claims data, some of the housing sales data, some of the industrial production data weaker. That means, does the Fed have room to cut later this year? All eyes on macro policy. We're currently just up only 13 points, though, on the Nasdaq at some big laggards that Ed is going to walk us through. I'm looking at a 10-year yield, though, getting a bid. We're seeing money move into the bond market on the back of that data, even as we see yet more supply coming from the 7-year side of things coming a little bit later. I'm looking at the dollar actually down versus the Japanese yen. Keep an eye on the yen. And we've seen such weakness. Will we see intervention coming from the BOJ? We're currently trading at 160. Move on and have a look at what's happening in the world of Bitcoin, because, look, we're still at about a $61,000 handle. We have seen some significant selling going on at the moment, but for now we're up more than a percentage point, so a little bit of risk appetite coming into crypto as well. But Ed, what are you watching?
I'm going to do something a bit unusual. I'm going to go right to private markets and start with this big story around SpaceX. A valuation of $210 billion US dollars based on the latest tender. A tender is where the company basically lets employees and insiders sell their shares to investors for liquidity. But because you assign a price to the shares, you're able to establish a valuation. This is a custom chart on the Bloomberg terminal that we make using those Bloomberg News reports going back many quarters and many years, but also the latest data from PitchBook. And it's a big jump, right? $180 billion was the valuation we reported in December of last year. We're up to $210 billion. Later in the show, we're going to go to Katie Ruth, who helped break that story last night. There's so much to discuss around this company, but also the idea that if you're a massive growth stage name, why go public? The private markets are there to support you. Micron is the big earnings story. It's really interesting. Like, they gave this sales forecast that at the midpoint was kind of bang on what the street was looking for. Really high expectations. It's a story, Caro, about high bandwidth memory. High bandwidth memory gets coupled with AI accelerators like NVIDIA's H200. And if that's doing so well, why is Micron not doing so well? Because of its legacy businesses, DRAM and NAND or flash memory, and those cyclical markets and end markets that they go into. 2-day chart, but the stock's down 6% in the session right now.
I mean, what's a CEO to do when they're posting revenue growth of more than 80%? Let's dwell on it for a moment. A closer look at a Micron after the release of their earnings report. And, of course, the follow-on for what NVIDIA is currently digesting too, their AGM meeting. That happened on Wednesday. Ian King is the person we turn to for it. And Ian, I mean, go to Micron first. This feels as though they just couldn't beat the highest mark out there for the estimates.
No, you're absolutely right. I mean, they are predicting that revenue will be up 90% from where it was a year ago, albeit that's a pretty easy comparison given how bad last year was. But yes, it's all about how much real demand are you getting from AI, how much of that real high margin kind of product, Ed's favorite type of memory chip, are you shifting and making money from?
I thought it was really interesting, and thank you for that, by the way. I even managed to convince you to embed the video we made about high bandwidth memory in your story, so now I owe you. He did some math for us. So he basically said, we know what sales are for high bandwidth memory in the quarter gone, the current period, and what they'll be in the next fiscal year. And you can see a really clear path that as the investment in AI infrastructure ramps, so too do sales of high bandwidth memory.
Yeah, no, absolutely. $100 million, which is relatively small for the quarter reported, going to multiple hundreds of millions, going to multiple billions next year. So when you're a company that has, about $6 billion of sales a quarter, that's a good sign, very good sign.
I mean, all of this, of course, is in comparison to what NVIDIA's been churning out, and the high bandwidth memory is what works in lockstep with their own chips. I'm currently looking at NVIDIA down 1.7%. It's been very volatile. What happened at the AGM yesterday, Ian?
Yeah, well, first of all, we're not allowed to call it an AGM, according to my American colleagues. That's an English thing.
Yeah.
Shareholders meeting, apparently. But yeah, they really just came out there and reiterated this pitch that they've given us, this new industrial revolution, this our products are becoming more and more vital to this giant change in the economy. So we really didn't get anything new. So if there was an expectation that perhaps Jensen would pop out some new numbers, maybe those were disappointed. But really it was just him kind of beating his fist against his chest and saying, look, here we are, and look how well we've done.
I feel like it was almost verbatim what they said in May, 22nd at earnings, in the deck, basically, that they published. But even so, there's just so much attention on NVIDIA right now. Bloomberg's Ian King, who leads our chip coverage, thank you so much. Let's get some more on big tech. This month's net selling in the tech sector has been the largest on record since 2017, with hedge funds aggressively selling tech stocks after the rise of NVIDIA. Bloomberg's Jess Menton joins us now for more. The markets are a funny thing. I don't want to go as far as to say fickle, because I remember you coming on the show mere months ago and talking about this FOMO trade at the beginning of the year. Now we had this net selling. Explain what the markets are doing right now.
Right. So how can you have this net selling in hedge funds? But then just last week, we had the Bank of America EPFR data showing that we had record flows going in technology stocks. So the reason is, if you look at a pie chart when it comes to flows data, actually, if you're looking at mutual funds, it's only roughly around 20% there. So you can have those record inflows into there. But that other portion, if you're looking at 70%, that composites of, say, like hedge funds, insurers, obviously pensions. So you can still have both happening, but obviously hedge funds contribute a bigger portion to that. So you can still have mutual funds having that record exposure, but hedge funds doing something else. And it's not just technology, it's specifically also more geared toward those chip stocks, Ed.
It does feel that maybe hedge funds are getting more risk averse more broadly. They're coming out of momentum.
That's right.
Is the hedge fund trying to be the canary in the coal mine here? They like, look, retail's pouring in, mutual's pouring in, we're starting to get out now.
Well, it's a great point, because normally if you look at what retail is doing, it can be a bit of a contrarian indicator to your point there, because if they're piling in, and then hedge funds, if you think of that as more of, may say, the smart type of money and how they're positioning, that does show you they are definitely moving more toward defensive areas of the market. But also a part of that is utilities. And that's also been an AI type of play, because usually it's typically thought of as less volatile, more diversified if you're in kind of a slower economic regime. But obviously the economy's been holding up well. In the latest Atlanta Fed GDP numbers for the second quarter are around 3%. So you are seeing hedge funds obviously pulling out when it comes to those chip and technology type shares. But even though it's more defensive, they are going to other corners that are AI plays as well, Caroline, including utility stocks.
I get I guess, concern of how long a rally in a particular sector or name is going to last, right? But I just have to remind myself, like, of the incredible gains, either on a year-to-date basis, 12-month basis. And at some point, you have to say, like, the going's been good, but it might not last that long, Jess.
I feel like we were talking about this a year ago as well. After that was also a record first half that we were looking at for the S&P 500 and NASDAQ 100 too, and everyone was questioning then how much longer can that continue. And Gina Martin-Adams over at Bloomberg Intelligence had some really great data looking at breadth and how basically what they were looking at a year ago would show that this could continue for a while, and it has. And Gina's team actually just put out data this week showing that, you know, people, I think anytime something like this happens, people like to talk about bubble type behavior. They're definitely not seeing that. With that said, though, if you're looking at the stocks, the Philadelphia Semiconductor Index relative to the S&P 500 right now, it's actually trading at its all-time highs and even higher than above that peak in March of 2000. So sometimes when I'm talking to sources, obviously maybe things have gotten a bit ahead of themselves. But even though people were talking about NVIDIA, you know, recently entering a correction or less than, obviously off of 10% off of that most recent high there, I mean, it was trading around $550 in the middle of January. And to look at, obviously, it had that stock split. So it's been quite a tear here. So sometimes if you bring up sort of the correction sort of mentality with NVIDIA, sometimes you will obviously get some eye rolls from traders there.
Steve Eisman calling it just a blip. Jess Menton, always great to get you on. What the hedge funds are up to. Meanwhile, coming up, talk about private markets again. SpaceX notching that $210 billion valuation in its latest tender offer. That's more than Disney's market cap, Ed. What have you got?
So, just got back from vacay, continental Europe and UK, and T-Mobile's My Carrier worked fine. But if you're a Verizon or AT&T customer, we're seeing a lot of complaints about the service not working overseas or abroad. There are service disruptions if you're a customer of those networks in different jurisdictions. Gillian Tam with the story on the Bloomberg. Verizon down 0.7%, AT&T down 0.3%, but clearly a little bit of concern that if you leave the country and those are your carriers, you might not be able to get your data or make your texts. Keep watching it. This is Bloomberg Technology.
Private markets. SoftBank's Vision Fund 2 is investing in artificial intelligence startup Perplexity AI. SoftBank will invest between $10 million and $20 million into the US startup, but that's as part of a larger $250 million funding round that triples Perplexity's valuation to $3 billion, making it one of the industry's most highly valued companies. Meanwhile, SpaceX, well, it's notching a $210 billion valuation as insiders sell shares at $112 a piece in a tender offer. That's all according to Bloomberg sources. Now, the higher-than-expected price boosts the value of Elon Musk's space and satellite company from $180 billion back in December's tender offer, making the company the second most valuable startup in the world. Joining us some more, Bloomberg's Katie Roof, and it's the most valuable in the US ever.
That's right. ByteDance is the most valuable in the world, but for U.S., SpaceX set its own record. It surpassed its own record. It's at $210 billion now, up from $180 billion in December.
Katie, there's just such intense interest in SpaceX and getting a piece of it. And I think it's worthwhile for our Bloomberg Technology audience around the world, explain the mechanics of how the tender offer works, right? Why us learning from sources the share price is important in the math.
Sure. And so the tender offers, that's insiders such as employees selling their shares to other private investors. And so the tender offer is different than a secondary where people are doing one-off trades. The tender offer is more meaningful because it means the company signed off on this valuation and that they're doing a large transaction, where hundreds of millions of dollars of shares, hundreds of millions of dollars trade hands. And so this is, meaningful, for Silicon Valley, when they're looking at prices and seeing that, companies can still raise at high prices right now, even if they're not AI. And it surpasses SpaceX's own record.
Bloomberg's Katie Roof. Late night, but important reporting from you, and saw the headline and thought, yep, saw this coming a little bit, big one. Okay, another story we're watching. Shares of Amazon right now as it plans to launch an online storefront for low-priced apparel and home goods, marking the company's biggest push to counter the rise of discount competitors like Temu and Shein. The company's plans were outlined in slides posted to websites for third-party Chinese sellers, showing Amazon shipping goods directly to customers from China. Okay, some breaking news just moments ago. California police have raided a Southern California warehouse filled with allegedly stolen merchandise they say likely would have ended up on online marketplaces run by Amazon and other retailers. Bloomberg's Spencer Soper on the ground with law enforcement. You have been witness to that raid, Spencer. Just give us the basics of where you are and what's happened.
Yes, so we're about 30 miles south of Los Angeles in Santa Ana, California. We're just off Interstate 5 at a warehouse behind me that's actually a retail liquidation center, which, can be legitimate businesses that get, scratched and dented merchandise and returns, and then they go about selling it. But this raid that just happened a little more than an hour ago, California Highway Patrol's Cargo Theft Division had information that there could be stolen merchandise inside. They got a search warrant, and they executed that search warrant this morning. So we had about a dozen officers swarm on the scene. They secured the facility, and what they're doing right now is going through, it looks like a hoarder house. There's like boxes from floor to ceiling of all kinds of stuff, vacuum cleaners, pet food, air fryers, all kinds of things that you can imagine. They're trying to sift through all that stuff to determine if anything's been stolen and if they can trace that back to a previous theft.
I mean, this is a big operation. They've got you on board to witness it. This clearly is important to them, Spencer. How economically important is it to companies that are losing their goods like this?
Yeah, that's a great question. And everyone's familiar with shoplifting because you see like cell phone videos of people loading up a shopping cart full of stuff and running out of the store. But this is far more serious and also more sophisticated, where they're stealing entire cargo containers. And one haul could be anywhere from a couple 100,000 to up to 20 million of cargo. So the losses get very high very quickly, and it's really been on the rise. The number of cargo thefts reported in the U.S. in the first quarter of this year were nearly 1,000, and that was up almost 50% from a year earlier, and it's just been going up with no end in sight. The thieves are getting more sophisticated. They're impersonating legitimate trucking companies, going to warehouses, picking up entire truckloads of inventory, and like they're supposed to be the ones picking it up and taking off with it, and then a delivery's never made where it's supposed to be, and that's when they discover the theft was made like days later. So it's a really big problem that inflicts a lot of damage.
Bloomberg's Spencer Soper, who is on the ground in Southern California, has just accompanied law enforcement in a raid where they seized allegedly stolen merchandise bound for Amazon. That's a first for this program, I think, and probably this network. All right, coming up on the show, we're going to be joined by Jeff Thomas, Executive Vice President of Nasdaq's corporate platforms business, for his read on the IPO landscape. Going to take a short break. Stay with us because we will be right back. This is Bloomberg Technology. Time for Talking Tech. And first up, OpenAI makes a deal with Time. The maker of ChatGPT has partnered with the magazine in a multi-year agreement that would allow access to current and historic content. In return, ChatGPT user queries will link answers back to the original source on Time.com. And Time will also have access to OpenAI's tech. Plus, the US, Japan and South Korea make a pledge for stronger tech relations. The three countries say they'll work closely on building out a more resilient supply chain in order to address weaknesses in key tech sectors like semiconductors and AI. The move comes amid rapid expansion and competition from China in the chip sector. And Webtoon Comics has raised $315 million in its US IPO, topping the marketed range. The online comics company sold 15 million shares after marketing them for $18 to $21 each. According to Bloomberg calculations, Webtoon has a market value of about $2.7 billion at that IPO price. Bloomberg spoke with COO and CFO of Webtoon, David Lee. Here's what he had to say on how they'll use that cash.
We'll use this to speed up and deepen the tools we give any creator globally to be a global hit. Many of the stories that you come to see on Amazon Prime or Netflix, the top show on Netflix today, The 8 Show, is powered by our platform. And so you'll see us continue to delight more and more consumers here in the United States and the rest of the world and invest behind our creators.
We want to talk more about listings right now and the international flavor of them. Jeff Thomas is with us, Executive Vice President of Nasdaq's corporate platforms business. We're going to be assessing the IPO landscape. And Jeff, I mean, today, a big day for Webtoon. And interestingly, South Korea-based Never is the company that sort of backs it. So we're seeing more international companies coming to the US to list?
That's right. On NASDAQ this year, we've had 64 IPOs, and nearly half of those have come from international. And so we've had Webtoon from Korea, we had Superhigh out of Asia, we had Merix out of the UK, Ferrovial out of Spain, all looking to come to the US capital markets because, frankly, they can get a better valuation, and the capital markets are wider and deeper here in the US.
That's not uniformly true, though, right? The chat around Shein is so interesting to me. They seem to be looking at London based on the political tension between the US and China. That was a headline that I think crossed while I was on vacation. I was very surprised to see it. What would the factor in that case be to your mind?
You know, I think there's always unique aspects to every deal. What we really focus on here at NASDAQ is trying to provide a great platform to support all of our companies from across the world. That includes having a great trading platform, supporting companies with our investor relations insights, and really helping them on their sustainability journeys.
Are there fewer Chinese companies, though, eyeing the US?
I'm sorry?
Are there fewer Chinese-related names eyeing the US to go public?
You know, I think we still see a lot of strong demand from around the globe. It's not just China over in Asia, but we have a lot of interest out of Southeast Asia. You know, not just Korea, like where Webtoon is from, but Vietnam, Indonesia, lots of other countries over in Asia are also looking to come to the U.S.
Yeah, VinFast is an interesting example of a name from that region in this market. I trying to get a bigger picture sense of what's going on. Like, we had this pocket of listings in September of last year, and we started the year with some energy. And we're showing a graphic on the screen now of all the VC-backed names that we've been waiting for ages to give us a signal on going public. Where are we in this market broadly at this moment in time, Jeff?
We do have a very strong pipeline of VC-backed tech companies that are looking to go public over, I'd say, the next 12 to 18 months. This year, the story really has been more about private equity-backed companies, companies in the healthcare sector. We've had some great names out of biotech. We just had Lineage Logistics file publicly yesterday. That's going to be the largest cold storage REIT in the U.S. So a lot of the more kind of steadier growth, highly profitable companies, and I think some of the venture-backed tech companies, we expect to see more activities out of those in 2025.
We were just hearing, though, how we've now got a new record setter for valuation in the US private markets, that being SpaceX. Many might think that Elon Musk would eye a Texas-based exchange, as and when that becomes a reality, Jeff. What do you think of the competition?
Well, I think, frankly, we endorse competition. I think the U.S. capital markets are unique in that we not only compete for listings in the U.S., but we also compete for all the trading volume. That's the way the SEC has set up the market structure here in the U.S. So it's highly competitive. There's actually 16 different exchanges in the U.S. There's dozens of different internalizers and dark pools across the U.S. And I think that competition is one of the things that drives such great outcomes for our listed companies. It's why we invest so much in our technology to provide a great trading platform. It's why we have to differentiate our value proposition to provide great marketing and visibility to our listed companies. And then, of course, all of the data and insights to help them understand who's buying and selling their stock every day.
And if you're a SpaceX, why go public at all when the private markets back you all the way? Jeff Thomas, Executive Vice President of NASDAQ's Corporate Platforms business. Thank you so much. Now, coming up on Bloomberg Technology, we're joined by Amrita Ahuja, CFO and COO of Block, a company named on Bloomberg's recent Ones to Watch list, to discuss the company's plans for upcoming launches and furthering their strategies for growth. Really looking forward to that conversation. From San Francisco and New York City, this is Bloomberg Technology.
Flow is still not quite there.
Private equity has slowed a little bit in the activity.
In our pipelines, we're seeing a meaningful acceleration in deal flow.
The key concern we have is, will there be activity where the buyers and sellers meet in the middle? And that hasn't quite happened yet, but I'm hopeful it will.
For the credit markets, you still have a lot of options, whether it's a recap, a minority sale, and that's what we're seeing. So it may not be asset sale outright, but a transaction's going to occur.
Now that rates have stabilized and that cuts are on the horizon, we are seeing the pipeline pick up meaningfully, which means you should start to see more deals, more velocity, and even if the base rate comes down, it's still going to offer a pretty attractive rate.
Some of the top names over the last couple of days at Bloomberg Invest. And look, talking about rates stabilizing, today we actually see a bid on rates. We see perhaps yields come down even ahead of that 7-year auction we get a little bit later today. We're off by 4 basis points. Now, some of that movement into the bond market has just stemmed some of the anxiety around the technology play here on the equity market as well. We're down by only 0.1%, even though we have some big drawdowns in single names. But for now, we're stable at off about 30 points on the Nasdaq 100. That is the bigger benchmark. I'm looking at the Bitcoin currently off by about a percentage point. Crypto managing to push on higher as we see a little bit of, well, risk on sentiment. We've got it in bond market, we've got it in the crypto market. But let's look at some of the individual names in the equity market that maybe is dragging down the overall Nasdaq 100, because Micron, the key one, underperformed, down by more than 6%, as you'll see. Look, the CEO comes out, spells the fact that they're going to see record sales in 2025, says that revenue is climbing more than 80%, points to a forecast of revenue up more than 90%. Not good enough. The market wanted to see more. This is all about, of course, the high bandwidth memory coming from Micron and its AI play. I'm looking at PDD as well, off by more than 3%. Its depository receipts traded here in the US. Pinduoduo owns Temu. And Temu maybe has some more competition coming from Amazon. That's dragging it lower. I'm looking at Palo Alto Networks, though. Interesting one, Ed. We're up more than 5%. Zscaler doing well as well. Security companies, cybersecurity, a real focus today. Is that because some analysts are liking it? Bernstein, for example, liking Palo Alto Networks? Or is it more an issue of what's just happening in the UK and hacking? We're going to be discussing that a little bit later. But for now, back to investment.
Yeah, another thing that's come out of Bloomberg Invest, the unveiling of Bloomberg's ones to watch list in finance and markets. Fintech company Block, known for financial services like Square and Cash App, made the list, shining a light on Amrita Ahuja, Block's CFO and COO. And I'm delighted to say Amrita joins me now on set in San Francisco. In my career, I've met many, actually, joint CFO, COOs, but it's a really interesting dual role where maybe at times you conflict with yourself because you have to manage the numbers and you have to run the operations of the business. What's that like?
Well, first of all, thank you so much for having me here, Ed. I really appreciate it. That's right. I have to hold both things, aspiration and discipline. Aspiration because the market opportunity that we're going after is vast, over a $200 billion TAM across financial services and commerce. And discipline because we want to do that with ruthless focus on unit economics and holding ourselves accountable to returns on those outcomes. And so as a COO and as a CFO, I'm very focused on both and continue to show, to demonstrate our progress towards our investment framework and financial targets of being a Rule of 40 company in 2026.
The stock is down 18% so far this year. There are multiple stories coming with Block, some of it very closely tied to Bitcoin, and we can talk in a little bit about strategy. But where would you say the company is at right now, in where you're trying to get it to?
I think that we have a tremendous opportunity ahead for growth. If you look at Q1 at an $8 billion annualized gross profit scale, we were growing over 22% year over year. To be at that scale and to continue to demonstrate growth, we clearly are serving very important needs on behalf of our customers, whether small businesses with Square or the over 54 million monthly actives for Cash App, which are individuals. We see a significant opportunity to do more of that. We're early. We use technology and AI to underpin all of our products, and we're focused on improving our product velocity to ship more products to our customers.
You are early. And in many ways, Amrita, regulation then has to play catch up. I mean, it's not missed on many that they're trying to bring financial and technology regulation into the 21st century. That's what the last sort of Congress vote was actually on. And I'm interested as to whether you think regulation is there in the right place for you at the moment with Block, because there is lots of investigations and there's lots of people trying to get their head around the future of crypto and payments.
That's right. And we welcome regulation as it appropriately serves consumers. We work with regulators. We look to build a healthy ecosystem for our customers. It's our top priority to maintain a safe, secure platform that builds trust over time. So ultimately, that's good for Block.
Trust over time. There has been some concerns around, for example, money laundering worries, trading within sanctioned countries, which, of course, I know is being investigated at the moment when it comes to Cash App. How are you working with regulators in that to ensure that you are bringing the level of transparency I'm sure you have internally to those externally?
We take any of those allegations extremely seriously. We're working by investing in the appropriate areas that, again, build a healthy and safe and responsible platform for our customers, including our compliance teams, our product teams, our risk management teams. We are always open to feedback and want to create that appropriate dialogue with regulators, policymakers, and our company, along with our customers.
Amrita, when I moved to San Francisco in 2018, Jack Dorsey was probably a little bit more closely associated with what was then called Twitter. And a lot's changed since I've been here in the last 6 years. He's now at Block, and what is that like working with him, your relationship with him and the role he plays day to day in the company? And when I look at the Bitcoin news that came out recently, how much is that where he's focused?
Of course, Jack is a visionary. He's now not only running our company, but also running Square. And so I would say that the vast majority of his focus and our focus is on our two mature ecosystems with Square and with Cash App. With Bitcoin, we have a stake in the future where money can move at the speed of the internet. And we think Bitcoin is the likeliest contender to enable that vision because it is resilient. It's been battle tested. It's secure. It's transparent. It's fairly liquid. And so, what we see as we look around the world is that often the most underserved customers are the ones who have to pay the highest rates to access their money or to move money around. We think Bitcoin has the opportunity to change that. We, of course, are going to be disciplined and prudent in how we invest towards that future. Less than 3% of our OPEX goes towards Bitcoin experiments and initiatives. But it could be a potentially transformative one.
I'm really interested in the investment side of it, Amrita, because yes, you're building product and can entirely understand why you'd want to experiment for the good of the consumer. But why the balance sheet? Why continue to have 10% of gross profit going into Bitcoin products as well each month, and indeed keeping it as an investment on the balance sheet?
Yes, it's 10% of Bitcoin gross profit, which is less than 5% of our overall gross profit. So it's a fairly modest sum. And what it helps us do is actually learn. It helps us understand what it means to custody Bitcoin, what it means for our treasury teams to be out in the market buying Bitcoin, what it means with respect to insurance. There's a lot of different things that we get to learn from this relatively modest and small investment in the scope of our much broader balance sheet.
Amrita, it's great to have some time with you. Congrats on being on the list. We appreciate your time. Amrita Ahuja of Block. Meanwhile, coming up, we're going to be joined by Shruti Gandhi, founder of Array Ventures, to talk about the really early stage investments in AI and how they're paying off for her. This is Bloomberg Technology. Time now for our VC roundup. First up, Anduril is in talks with Peter Thiel's Founders Fund and other investors to raise $1.5 billion. That's according to sources. This would be one of the year's largest funding rounds, not exclusively focused on AI, just AI enabled. Plus, Sequoia Capital is leading a $16 million investment in Dust. It's a French startup building customized AI bots for companies. Now, the startup makes software that plugs into offerings from OpenAI, Google, Anthropic, and Mistral AI, and then links up to apps like Slack. And it's not Sequoia's only AI investment on the day. Clay, an AI startup focused on sales and marketing for businesses, it's just raised $46 million from investors like Sequoia, but also Meritech and First Round Capital and others. This brings the company's valuation to $500 million, Ed.
Okay, let's keep talking about investing in AI and bring in Shruti Gandhi for more on today's VC Spotlight. She's the founder of Array Ventures, which manages $150 million in AUM. And the focus is getting into AI names at the very earliest stages. And I think this is a very well-timed and important conversation. 2 days ago, we had the Etched founder and CEO on the show, and they had this debut round, $120 million. And after he'd gone off the show, loads of people reached out to me on social media and said, great interview, but they don't have anything to show yet. They're talking about taking on the NVIDIAs of the world, and it's a hardware play. And so that's what I want to ask you about in the first instance. Getting in at the very early stages, how do you know that that's a viable business, a viable technology, a viable plan?
Thank you, first of all, for having me on this show. Very good question. Actually, it's not that hard. Today, there is ways to invest, which is one is focus on pain points, and then there's areas to just invest because they're glamorous founders. There's also, AI is kind of distributed currently in two ways. One is model companies, and then there's applications.
Yes.
I'm sure you've heard a lot about that. There is also...
Well, just as Caroline just outlined in some of today's news stories.
Exactly. So there is a whole bunch of investors going after the model companies. And they're all it's kind of race to the bottom in some ways because they're all just getting better. But people and funds are feeling like they're missing out on getting into the best AI revolution just because it's being compared to the early days of internet today. But then there's the application layers, and then there's real pain points that companies need to solve. be it in different form of verticals and HR. It could be in CIO, CISO. Everybody needs efficiency. And today, you can solve that by not raising that much money. You can solve for that early days by testing the waters, calling your friends, and figuring out what do you need to solve and how can I get started with just a few $1 million. And once you do that, then you can go raise a big amount of capital after that. But I don't think everybody needs to raise that much money if you're not a model company.
Okay, so if you're going to allocate some of your money to a company that just wants the first round to get things rolling, to answer the consumer's need, how are you deciding where's the best place to put it?
That's right. Thank you so much for asking. But I think it's what I just said. We focus on pain points. We talk about this thing called agitated workforce, which is if a founder is at a big company, agitated, they're really upset about trying to solve some big problems in AI, in data, in infrastructure, in cloud, in security. But what they cannot do is get permissions and budgets with the tight budgets today from their CIOs to go solve for that within the company because it's not mission critical at the current company. Then they go on and go say, talk to their few friends and they say, if I build this, will you buy? And their friends out there are saying yes. So if 3 of the 5 friends they talk to, they say that, that's when our founders go and build, get the conviction to build those companies.
Yeah.
Frankly, you don't need that much money early days to put a team together, especially if you have a core team of amazing engineers, to go put that team together, go solve for those problems because you've built them before. So what we invest in is pre-seed companies. So that's first check ever into a company, and you do not need that much money to go start and validate your ideas.
Your initial check size, about $1.5 million. Shruti, how long do you then stay with the company? Because as you say, there's a sudden rush, a tussle to get in at later rounds with heady valuations. Do you have a liquidity event then, or do you try and ride it out for the exit, for the M&A, for the IPO?
That's a great question. We don't think of ourselves as a one-stage investor. Usually we ride it out, but we've been very fortunate in the last few years to get liquidity events at Series B, C plus stages of the companies. So sometimes, as a prudent investor, we will sell like 1/10 of our shares or less than 1/10 of our shares in a company. We just did that and we returned our first fund, which was a 2016 vintage. So we will consider that as a case-by-case basis, just as a fiduciary responsibility to our LPs. But our goal is to never get out at the second or the third round of the investment.
Shruti, one of our audience members has written in on the Bloomberg terminal via IP and say they agree with you that AI can mean different things, but they add that for some investors, mock-ups and wireframes are not products, and for some other investors, they are. That's an interesting point. Where I want to go to end is, you have to find these people. If they're pre-seed, where are they coming from? Where are they coming up with their ideas?
Yeah, so it's a great question. Oftentimes people think that you just call your other VC friends and get deal flow, but not in pre-seed. Pre-seed, you're building networks at operators, at amazing companies that are coming, people that have worked for 2 to 4 years at a hot company
prior to that. Might have been laid off?
Maybe or maybe not. It doesn't matter. I think what matters is they've built this before. What matters is they know how to build this, and when they go take it on as a startup after this, they're going to go do it with very little amount of money, which is a pre-seed round. So that's where we invest, in people coming out of different, operators coming out of different companies.
Shruti, so great to have you on. Come back. Shruti Gandhi, founder of Array Ventures. Meanwhile, coming up, we're going to be joined by Bloomberg's Ryan Gallagher because we're discussing the recent cyber attack against lab services provider in the UK, Synovis. It's caused a major breach of NHS records. What are the implications? This is Bloomberg Technology. Talk sport. FIFA seeking to raise as much as $2 billion for the expansion of FIFA Plus. It's the free streaming service launched by the football's global governing body to offer live coverage of matches, according to people with knowledge of the matter. For more, let's bring in Felix Gillette. You like how I called it football?
Yeah.
Soccer. Felix, It's a good time to be selling some sort of sports right now.
It really is. I mean, it's an expensive time if you're a buyer.
Yes.
But, all these streaming services have launched these ad-supported tiers. I think the biggest movement right now in the whole home entertainment world is the fact that, as they try and build out these advertising, ad-supported part of their platforms, they're going to need more live sports, right? And so every time any bit of sports rights comes up for sale, you just see the prices going up and up. You see the NBA, about to sign these huge deals. They're getting a big bump. FIFA, if they have some secondary packages, you can go out in the market, sell the rights, or distribute them yourselves. It's a great time to be selling sports rights.
Felix, tell me a bit about FIFA Plus. I mean, I have Sling, I have Paramount Plus, I watch football at the weekends on Peacock. Do I need to get myself FIFA Plus as well?
Depends on your level of addiction. I mean, you have to go pretty. You have to go pretty far down. I mean, the best soccer, the World Cup, those rights, the broadcast rights, for 2026 have been sold. You'll watch in the U.S. You'll watch them on Fox. But I think all of these leagues, you get down to the smallest slices possible, whether it's soccer, tennis, basketball, football. In some ways, I think actually the NFL has been the model for, you try and chop them up as small pieces as possible, because every slice you can find a buyer for, or you can put them on your own streaming service and, get advertisers or, sell subscribers.
Indeed. Bloomberg's Felix Gillette out of New York. Thank you. A big story out of the United Kingdom. London hospitals are facing major consequences following a cyber attack against lab service provider Synovis on June 3rd, which resulted in the release of sensitive medical records and NHS patient data. Bloomberg's Ryan Gallagher joins us with more significant, seeing some of the UK papers cover this as well. Ryan, just explain what happened.
Yeah, so what happened was on June the 3rd, a Russian-linked criminal hacking gang that call themselves Quillen broke into Synovis's computer systems and deployed a kind of malicious software that essentially locked down Synovis's computers. And Synovis is a really important company because it provides blood testing, biopsy testing for a whole range of hospitals in southeast London in particular. And what it meant was that these hospitals couldn't test blood for their patients. And now, into the fourth week of this incident, the hospitals have been unable to test blood at normal capacity, which has obviously caused massive problems for them.
Yeah. And then there's the horror to realize that maybe your own personal information while pregnant, your own newborn, your own diagnosis of schizophrenia might now become a more public form of information, Ryan. One's hearts go out to those that might well be affected, and many are. And I'm wondering what, therefore, the ramifications are, because it seems as though the NHS knew that there were vulnerabilities.
Yeah, I mean, the unfortunate thing is that the gang behind this attack actually on Friday last week published a huge amount of data that they stole from the computers before they locked them down at Synovis. And they've now, dumped that all online. And I had a look through some of it, and it's a huge volume of information. I seen in myself 40,000 quite detailed medical records on patients from across the UK, which was the striking thing, because obviously the incident itself has primarily affected the London hospitals. But what I found was that Synovis has actually been doing these tests for hospitals across the UK and Ireland. So it really is impacting, the data breach is impacting the whole UK and Ireland now. Which wasn't really understood at the outset of this. So there's people across the country who are, their personal confidential medical information is potentially being put out there as a result of what's happened.
Meanwhile, the NHS England trying to talk of their cyber resilience, the amount that they've invested, but thus far they need to keep an eye on their third parties. Ryan Gallagher, great reporting. Thank you for bringing it to us. Meanwhile, that does it for this edition of Bloomberg Technology. A lot we got in.
Yeah, incredible reporting from our colleagues in newsroom around the country, around the world, actually, in fact. Recap all that on the podcast. You know where to find it, on the Bloomberg platforms, but also on Apple, Spotify, and iHeart. One more day to go, and it's a big one this Friday. This is Bloomberg Technology.